Hey everyone, this is Gary. Hope you all are doing well. Oops, that's not what I wanted to do. Hang on one second. Here we go. Okay. Hi everybody, this is Gary Wilson. Welcome to this week's live investor agent webinar. And for everyone else who's either in the flipping program, the rental program, managing rentals, wholesaling, welcome aboard to all of you, basically to the Path to Prosperity series. And welcome veteran and new agents alike and new investors alike. So we are now live and recording. So just a repeat of housekeeping. If you are new, you'll notice that you're in default, by default in mute mode. Okay, it's because we can't all be talking at once, obviously. However, I will unmute you from time to time. And more importantly, if you use your question box to pose questions, that allows me to stay up to speed with your questions, okay? Now, a little bit more housekeeping. Every day that we do these, which is once a week, you do get a recording of this the very next day. So please always look for the email from Beverly that not only has the recording, but she also gives you whatever updates there are to the different platforms, to the silver level members area, to the digital chalk learning management system, to the community site, things like that. Updates to the material. She sends out updates to the material that way. So in any case, keep an eye out for that. The schedule's on there also of the upcoming webinars and just different instructions. So it's important that you keep up with that so you're aware of what's going on. It cuts down on a lot of labor, if you will. So we appreciate that. And also you can always email me with questions. And if you have subject matter you'd like to cover at any future webinar, just let me know that and I'll schedule it in. Tonight's subject happens to be focused on loan programs that we can perhaps use when it comes to investing. Before I go there, I wanted to, I guess, officially announce, I think I did this last week. The next 3-day event is going to be right here in Atlanta. I'm in Georgia the entire month of June, and it's going to be Friday, June 29th, Saturday, June 30th, and Sunday, June 1st, July 1st, excuse me. That's a half a day. Friday and Saturday are full days. Sunday's a half a day. This is where we're going to be going over the content from all 5 training programs. Okay, we've done a couple of these and really worked out well. So I'm excited about this one because I haven't been in Georgia this much for 2 years, and a lot of people did quite well with this here in Georgia. Georgia's a great place for investing, guys. For those of you looking to deploy your assets in other locations outside where you are, you know, Ed up in, if I know lots of Canadians who invest down here, and also Tom, Shirley, you know, Daryl. I mean, come to the event. I know Daryl and Tom, you're coming to the 2-day retreat for the mastermind group. So, you know, it'd be great. David Evans is going to be there, and perhaps he can give you some insight into investing here in Georgia. So, in any case, all of you are going to be getting an invite from Beverly to the 3-day event. We didn't do this in Virginia because the spots were going pretty quickly, so we just made it mainly available to Virginians. Georgia, we've already have 9 spots filled, guys. So if you want to come, no matter where you are, Wisconsin, Washington, California, you know, New Jersey, New York, you know, Toronto, go ahead and schedule quickly. You know, book your flight. The rooms are very inexpensive. We got a great deal with Marriott to get rooms for only $100 a night, $99 a night. Okay, and you can split a room. You can do double occupancy for $55 each, which is great. And my investor services feeds you lunch on Friday and Saturday. For those who are in the mastermind, you also get lunch on Sunday, and then dinner on Saturday night. Okay, so in any case, very relatively inexpensive thing to do. If you're an active student, and if you're on this webinar, that means you're probably an active student. You don't have to pay for the event. Okay, if you're an active student in any of the programs, you get to go. So how about that, huh? So in any case, keep an eye out for that from Beverly. And I look forward to seeing a lot of you in person again. It's been quite a while. So in any case, back to the night's subject. I've been a lot of questions on you know, creative purchasing techniques, creative financing, and somebody asked a question: what are the loan programs, official, you know, loan programs that are available? So we actually have that information. We have the content. Some of you have already seen the sixth book. If you were in Orlando or Virginia, either of those 3-day events, you got your own copy of the new book, Massive Passive Cash Flow Method, like 540 pages of content. And in there, we talk about different loan programs, federal, state, local. So we're going to go over tonight the federal level. And some of these do exist in various forms in Canada too. Canada's a lot different, guys, for you Americans out there. Canada, in the entire country, we don't sell mortgages. In the States, we sell mortgages. Most banks sell mortgages in the States, which is why FHA exists, Federal Housing Administration. They monitor and administer the whole process of banks that sell mortgages. I think what that means, they package the mortgages up, put them out on the market, like through the stock market. So you can buy shares of Fannie Mae and Freddie Mac and all that. And the money that you spend to invest in those, what's the blocks of loans, the underlying investment, frees up that money to be loaned again. Okay. And sounds like a great idea. And it was back in the 70s, but through, greed and fraud and mismanagement, it created a huge meltdown, of course, starting in 2007. Well, it started way before that. It didn't show up until about 2007. Well, in Canada, no mortgages ever sold. Well, guess what? We never had that big problem in Canada. While we were struggling here in the States, things were chugging right along up in Canada. So in any case, much more limited up in Canada. Now back to this. First things first, let's just go into a little bit of some fundamentals here, okay? I'm going to go back to the question box just real quick, just to make sure we're okay, and it looks like we are. So first things first, the different programs exist for different reasons for different people in different categories at federal, state, and local levels, okay? We've got the obvious first-time homebuyer programs, programs for low to moderate income buyers, disabled, handicapped folks, minority like women, American Indians, properties that have environmental hazards can get special loans, elderly can get special loans, people who are delinquent on their mortgage payments. We've seen all that happen in the last 10 years, different loan programs, okay? People who want to build low-cost rental properties or even purchase them already existing. Robert Kiyosaki is one of the great examples of that. I got to meet him a couple of years ago. He came to my mastermind group and spent an evening there. And one of his favorite strategies was he would buy large apartment complexes, and as long as he made a percentage of those units available to people who were receiving a rental subsidy through the government, like Section 8, for example, he was able to get Freddie Mac loans, a Freddie Mac loan at a 40-year term at 3.5% interest. And this was an interest rates were not 4 and 5%, guys. They were much higher. So in any case, lots of programs out there. How about neighborhood grants where neighborhoods need revitalization? There were loans at one time for migrant farm workers, people who live in mobile home parks, people who want to have energy efficient homes. Okay, all kinds of loan programs out there. So let's look at some tonight. We'll look at some tonight, and I'll give you a summary at the end, and you can see whether you can use this for yourself, or you can introduce this to your clients so they can see how they can perhaps do more purchasing, all right? Buy more properties. So you can use it for your buyers or your sellers, I guess is what I'm talking about. Now, obviously, we could spend literally 5 weeks going over all the programs in all the states and provinces. So what we're gonna do is talk about the US federal programs, okay? And then I'll show you how you can contact the municipalities, local areas, and state agencies to see what's possible in your area. All right, first and foremost, let's get the most obvious out of the way, which is your basic FHA mortgage, okay? Quite frankly, I used these in the beginning when I first started investing. I bought a number of properties using FHA insured loans. I don't like them. I haven't done them for years. But when I first started investing, it was a great way to get up and running, great way to get established. In other words, I could, put minimal money down, even on a non-owner occupied property, put minimal down payment, 5%. Even there were times we could put down as little as 3%. and then finance the other 97%. And you can do that for anything that included up to 4 units, okay? Now, nowadays, your primary home, you can get an FHA loan for that, or it could be a fourplex as long as you live in one of the units. Triplex, duplex, fourplex, as long as you live in one of the units, you can get this FHA loan with better terms, but they will let you buy other rental properties, okay? And in fact, a lot of people think, hey, you can only buy 4. That's not necessarily true. You can buy up to 10 properties in some cases using FHA, okay? So in any case, fundamentally though speaking, it was originally designed for people who intend to live in the home they're purchasing, okay? And they have, you know, some money. Well, here it is right here. Home buyers or current homeowners who intend to live in the home, able to meet cash investment, mortgage payments, eligibility, and credit requirements, all right? And if you ever want to see the terms of these things, guys, you can actually click on these links, okay? I know this is a Word document, so it's not like although I bet if I clicked on it, it would work, it says here. You can see all the different terms. You can see what the steps are in the process, the application process, contact information. And in fact, what I'm going to do, guys, I will send this to Beverly tonight. So when she sends out the webinar recording tomorrow, you'll have all this information in there in a Word document, okay? But in any case, most of the contact information, and by the way, quick pause here. Everything I'm going over in the first part of the webinar tonight is as of this webinar and as of this writing, these are all the current programs. There are many, many more programs in the past, lots of different programs. And if I have time, I'll go over some of those. You just have to check with your state and see which ones are current at the moment, okay? But in any case, that's your basic FHA loan. We're all familiar with that. We've either used them or helped clients get those types of loans, okay? Now, next one is a veteran program. So Veterans Affairs, which is your VA, okay? You can do what's called a cash out refinance, okay, for homeowners who want to trade equity for cash in their home. And of course, we investors, we love to do that. We want to, you know, once we have a property that we've owned for a while and we've seasoned it, we've established greater equity position, and we have solid cash flow, we often want to leverage that equity to purchase other properties. You can do it through a number of vehicles, but the reason I'm bringing this up is if you're a veteran, you know, if you're active duty or a veteran military, there's a great way for you to do it, and they make it, quite frankly, you know, very easy. So if you look in here, and you can use, and by the way, you can use it to pay off debt, make home improvements, pay off liens, all kinds of possibilities here. And the other thing about a VA mortgage, guys, is it will lend you up to 100% of the value of the property. Not too shabby, okay? Particularly for your veterans who want to invest. And by the way, one of my favorite techniques I've seen with working with military is, particularly once they retire, they can recycle their VA eligibility over and over again. And so what they'll do is they'll buy a property using their VA eligibility, and then once they've, you know, fixed it up, remodeled it, raised the rents, whatever the case is, they'll refinance it with a conventional mortgage, a non-VA mortgage, or refinance that with a conventional mortgage, thereby freeing up their VA eligibility, enabling them to go out and get another property at 100% financing. How about them apples, okay? So I love working with military because the ones that are savvy, and most of them are, and they have an interest in investing, that's one of the most favorite strategies that they use, okay? So in any case, if in order to qualify, obviously you need to either be a veteran or service member, current reserve, National Guard, and sometimes certain surviving spouses can also qualify under certain circumstances, okay? So in any case, if you are truly a veteran, if you're retired, you have to have been discharged. You have to have an honorable discharge, I guess is what I'm getting at, okay? And there's length of service requirements too. And you also have to certify that you're living in the property. Again, it can have a number of units in it, up to 4 units typically. You just have to live in one of those units. But again, the trick is to use VA to purchase the property, and a year or two later, refinance it with a non-VA mortgage, freeing up your VA eligibility. So I just want to let that sink in for a second and see if we have any questions, because this is probably a very popular one. And they'll finance, by the way, up to 30 years, just like FHA. Okay, let me check for questions here. I think we're okay. Oh, sorry, I missed one. Let's see, this is from Bonetta. Hi, Bonetta. Yes, I did. Oh, you mean you got the email from me? Okay, good. And I also found the video, but I'm not having some trouble finding the community profile on Northern Virginia region.org. Yeah, Bonetta, the regional planning commissions, they're not like mandatory. So in other words, everywhere in the U.S. and Canada, we have what's called planning commissions. They exist at the municipal level and at the county level. Okay, some regions have decided to band together, like municipalities and counties will band together and form a regional planning commission. I do believe at one point parts of Northern Virginia did have one. Not all of Northern Virginia, but parts of Northern Virginia have one. I don't know that it still exists. I used to live there. It's been a while. But there are different parts of the country that do have that. And it does provide more information. But fundamentally, Bernetta, you want to type in, you want to look at the county levels. At the county level, you're able to usually get the most data. So you would type in Fairfax County Planning Commission, for example, okay? So I don't know that the Northern Virginia Regional Planning Commission still exists. I just don't think that it does. It's been quite a while. So in any case, I appreciate the question, and I think I will be speaking with you. Well, I know we have a call coming up Thursday at 5. How about that? Okay, so I'll see you Thursday at 5. Okay, so in any case, back to this again. Loan terms up to 30 years, and every veteran has eligibility levels. Like you might be eligible for 300,000, you might be eligible for 500,000. Okay. Now, in any case, here's the application process. What you have to go through, contact information, all that's in here. Okay, so let's go to the next one. Combination mortgage insurance for manufactured home and lot. Well, I've never been a big fan of mobile homes, but I will tell you across the U.S. in particular, I've met several of our students, investors, who do invest in mobile home parks, and at least 3 of them have made huge profits doing it. Fundamentally, I do want to tell you this. The ones I've known who have been the most successful did not own the mobile homes. They just simply owned the park, the mobile home park. And they leased the individual spots to the people who want to park their mobile home on the spot and pay them a monthly lease. Now, the reason I say that is I've met several of you who are actually wanting you already own the mobile homes or you're looking to buy them. And my only reservation is, guys, is it's not an appreciating asset. A mobile home actually depreciates over time. It loses value. It's not like a regular stick and stone house, okay? However, a lot of you still do it because they're so cheap. You buy it so cheap and then you rent it out. And maybe your game plan is you don't care about appreciation. You're just looking for the cash flow. But at some point, somebody's going to do something with that trailer. If it becomes too out of date and it's no longer inhabitable or will not pass inspection, you're now stuck with it, okay? It's not like a brick and mortar home where you can sell it and make some money. So I just want to throw that out there. I'm not necessarily against it. What I'm saying is, if you want to be in the mobile home space, you may want to talk to, a couple of the guys in the program on our team who specialize in that. And I will tell you, they will try to encourage you to focus on being the landowner and leasing the land to the mobile home renters, okay? But not necessarily owning the mobile homes themselves. So in any case, back to this. Believe it or not, you can get loans to buy land and put mobile homes on there. Okay, it is FHA, an FHA program, and you can read all about it here. Again, I won't go into all the details here. I just want to let you know what's possible. And because of that, it makes it possible for multiple banks to make these loans as long as they're FHA insured mortgages. Okay. Again, you got all the contact information there, the application process. By the way, the home does have to be your principal residence. Sometimes there's time frames on that. In other words, you have to live in it for a minimum of 2 years, okay, before you can ever consider renting it out. So just keep that in mind when it comes to this type of a FHA-backed mortgage, okay? Okay, let's go on to the next one. Some of these I may just skip, but when we get to them, we'll see. Here's something that's interesting. Direct home loans for Native Americans, okay? In Canada, we call them First Nation. In the States, are Native Americans, okay? But the Native American Direct Loan Program makes it possible for Native American veterans to purchase, build, improve upon their own home anywhere on federal land, trust land for American Indians. Okay. In any case, if they're not a Native American but you're married to one, you may be eligible for direct loan under this program. Okay. As a matter of fact, here's the requirements down here. So you must be eligible veteran. Your tribal organization, must be participating in the program. Your tribal organization has to sign a memorandum of understanding with the Secretary of Veteran Affairs. Spells out the conditions. You apply for a certificate of eligibility. The loan must be to purchase, construct, or improve a home on Native American land. Okay. And you must occupy the property as your primary residence, right? So, in any case, and you got to have some halfway decent credit. Great program though, and if you're a veteran, in this case you're supposed to be, you must have at least an honorable discharge, okay, from the service. So, in any case, here's one that's pretty neat. Energy efficient program. Again, another FHA program. I remember when I was a kid back in the 70s, putting solar panels on people's roofs was a big deal, and the government was making some very low interest loans, long-term loans for people who wanted to be more energy efficient, use natural resources like hydro, like in Canada, for example, anywhere around Toronto, as far as where I live in London, Ontario, our electricity is all based on hydro. We've got Niagara Falls up there, the American side and the Canadian side. And if you're not aware of this, you might want to read about it or watch. There's a documentary you can watch going way back when Edison was actually involved in this. But they tapped into the enormous power behind those falls to harness the power to generate electricity for a huge grid. I mean, the grid originally stretched all the way down over to Ohio, down into Pennsylvania, over to the east to New York. And of course, in Canada, it's pretty much all the populated area of Ontario. It still is today, in fact. In Canada, we don't call it our bill an electric bill. We call it a hydro bill, okay? So in any case, what I'm getting at is there's hydro, there's wind power, which are the big turbines, the windmills, and also, of course, solar, which is mainly what this is about here. So in any case, trying to ramble there, but basically helps you make home improvements that allow you to save energy costs, okay? Sometimes it's just simply weatherizing your home, things like that. But what they're really looking for is energy efficiency, okay? So in any case, you can get loans to build homes that are highly energy efficient, okay, and also get loans to make improvements, to do remodeling on those properties. All right. In any case, basic requirements to loan or to qualify for the portion of loan used to purchase or refinance home. Borrowers must be required to qualify on a portion of the loan used to make energy efficient upgrades. Okay, that's essentially all it says there, right? FHA approved lenders are eligible to offer EEM persons who are purchasing and refinancing with an FHA insured mortgage. Pretty self-explanatory. By the way, we're just talking about loans here. There's also a lot of grants that we can apply for, guys. Grants, a lot of times grants are, you don't have to pay them back. Grants are literally where the government's granting you money to do something. And believe it or not, there's a lot of grant programs out there, okay, that you may be eligible for, you or your clients, all right? In any case, same thing, contact information, application process. How about loans for disaster victims? Okay, remember Katrina, I mean, there's any hurricane, areas have been devastated by tornadoes, flooding, like last week, Virginia, parts of Virginia, central Virginia, were underwater. I mean, roads were literally run over. You couldn't drive over them. The water was actually up to the bridge trestles in some cases. In any case, there's a 203H program that's makes it possible for survivors of natural disaster to recover. You know, get mortgages to build a new home. Most cases, you're not working on the one you lived in because it's probably gone. You just have to get a new home. But these loans are available. Okay. Now, here's why this is important to all of us, whether we're homeowners or investors. Years ago in 2004, coming up through the Ohio Valley, Mississippi Valley, Ohio Valley, 2 times in a row within 2 weeks were major hurricanes. Went all the way up through the valley, all the way up through Pennsylvania. By the time they got to Pennsylvania, they weren't hurricanes. They were just really heavy rainstorms where they combined and flooded the area twice, okay? The second time, I mean, there were literally entire townships underwater. And I had a dozen properties that were underwater as a result of that. Fortunately, I had a flood insurance, okay? But a lot of the folks there, a lot of my neighbors were getting loans to do a lot of remodeling and building. I actually made out on the deal. My properties ended up being better properties when it was all said and done, more valuable because they were freshly remodeled. And most of my tenants came back. I didn't raise the rents, but the ones that I had to re-rent to a new tenant, you better believe I raised the rents. So it's a good old-fashioned lesson in having faith and being patient. You know, in every catastrophe, in every calamity, there's always opportunity. You just have to be awake and aware and look for and seize the opportunity, okay? In any case, great that those are out there because you know what? Mother Nature has her way with us sometimes, right? Okay, let's see. Rehab loans, right? These are 203Ks. Now, most of you are already familiar with 203Ks. You know, you can do a 203K, for example, on a duplex. All right, no reason you can't. I've done one before years ago, and the cool thing is even though it's sort of there's a lot of government intervention, like these programs require inspections. You know, the 203K inspector has to come out at different stages of the project and approve things, and then they release more funding to pay, you know, for the contractors. It's like a construction loan almost, okay? And at the end, it just converts to a regular mortgage. But it's a great way to buy a property with the funding in the loan. The loan will include money for the purchase and the remodeling. You can do it on a new purchase, or you can do it on a one you already own, a refinance, okay? And pull out money to basically do the remodeling. I love these programs. I haven't done them all, but some of these I've actually done myself, okay? In fact, let me check for questions here and see if anybody's done one of these. Matter of fact, let me know if, for those of you who are out there, let me know if you've done one of these loans before, okay? Or you've had clients who've done that. Okay, now I'll keep trucking along here. There's another document I want to jump to in a moment that has more information if we have time. Again, another disaster loans, Small Business Administration, a different entity. It's another government agency, but it's not part of HUD, not part of Housing Urban Development, not part of FHA. The SBA allow you to apply for up to $200,000 to replace or repair your primary residence back to its pre-disaster condition. So So these are, this is amazing that they do this, you have to, you have to bring it back. You have to bring your property back to the original condition, if I'm not mistaken. There's certain requirements so that you can see all this. Here's the program description. There's again, because it's a government program, there are requirements to be met, and you really want to read and understand all these requirements. And I could go over all these, but I think it's best if we go through all the different programs to identify them. And I'll have Beverly send this to you, and you can Google on your. We give you all the websites and everything, contact information. You get all the information you could possibly want on these programs. Okay. Okay, so let's move on here. The Small Business Administration. By the way, it says here, I forgot about this. Renters can also borrow up to $40,000 for damage or destroyed personal property. Okay, so even if that's what I'm saying, if you have a rental property that's been damaged, your renters can also apply for small business loans. Okay. In any case, there it talks about the loan terms. They can go up to 30 years. All right. $200,000 for the structure, buildings, and improvements, right? And the $40,000 is for your personal belongings. So in any case, that's the Small Business Administration. Another Native American, basically the Indian Home Loan Guarantee Program. It's through HUD directly. Okay, it's a great way to. Basically what this does provides safe, affordable housing, safe, clean, reliable, and up to code. All right, for low-income families through an authorized public housing agency. Every big city has one, and you can do this. You can be part of this if you want. In this case, you must be Native American. You must be in need of aid. You have to meet certain low-income requirements, things like that. Okay, but you can. Some of these properties, guys, in the past, once they've been were brought up and running, they were put out to the public, and you could buy them. Investors could buy them. I've seen it happen in other cases, a number of cases. All right. Another home loan guarantee program through HUD for Native American Indians. So let's see what else we got down here. Hang on one second. Interest rate reduction refinance. This is another VA program. It's what it does basically allows you to refinance, and they do not require credit underwriting, and it may include the entire outstanding loan balance. This is a great benefit for our servicemen and servicewomen. Okay. Any case, great program. So just remember, if you have clients who are military, make sure you bring these up to them, guys. Let them make sure they're aware of what's possible out there. In this case, you've got to be active duty. Whoops, excuse me. Veterans or active duty, either National Guard or reserves, and certain surviving spouses can also qualify. Okay. There's your terms again, the application process. In any case, all right, another program for veterans. If they have a subprime mortgage, which means they probably paying higher interest rates, there's a great way for them to manage that and get their terms modified and adjusted through counseling. Okay, that's possible for our veterans, right, and active duty members. Let's see, I think we're getting close to the end. Aha, here we go. Another manufactured home loan program, all right? Again, if you want to do prefab homes, you can get loans for that from the government to do that. All right, there's your application process, contact information. Here's property improvement, rehab loan, basically. For FHA, makes it possible to pay, affordable loans for people who are engaged in remodeling projects. Okay, so let's just scroll down. We're going to get down to the general requirements here. So, the borrowers include the owners of the property to be improved, the person leasing the property. How about that? If you're a renter, you can get this loan as long as you're there for 6 months past the period. By the way, there's another program out there that's not documented here. It was through the ADA, American Disabilities, and what they would do is, I had this happen to me years ago. I was approached by a prospective tenant who was disabled, wanted to rent one of my units, and I said, I apologize, it's not really handicap accessible. At the time was a small operator. He said, no worries, I can get you a grant, and all you got to do is sign for it, and they'll do all the work, and I'm the one benefiting, the tenant. So I signed it, and sure enough, a qualified contractor shows up. He's been pre-screened from ADA, put in ramps, shower installations, countertop modifications on the bathroom and kitchen sinks, things like that. New toilet, grab bars, one of those stair. It's like they put it on along your stairwell, and you can hook in a seat or a wheelchair, fold it up, and it hoists you up the chairs. They did all of that, paid for everything, every single dime. And then one of the cool things was, guys, is this: when that person moved out, they were also responsible for coming back in and putting everything back to its original condition. Now, I learned to not do that, and here's why. You can actually make more money on ADA compliant rentals than you can on non-compliant rentals. In other words, there were times that they would pay you up to 3 times normal prevailing rents, okay? Up to 3 times prevailing rents to have your unit be made eligible for disabled consumers. So they would do the modifications for you and pay you 3 times the prevailing rents. How about that? Okay. So in any case, that was, I don't know if that still exists right now, but I'm going to show you how to find all this stuff out. I'm just giving you the basics right here tonight. Okay, rural housing loans, obviously, just like it says. These programs are usually very limited. If you think about population density, you've got a state like Montana, who has just under 1 million people in it, okay? That's smaller than the top 10 major US cities, okay? Toronto, for example, has around 5 million people. That's Canadian, of course, Canadian city. But in any case, the entire state is extremely rural. I mean, some of you may be from Montana here, because we actually have students in Montana. And I drove across Montana one day. It took me 3 years. Just kidding. But in any case, there's programs to buy property and put homes on those properties, no matter how far out they are. And it exists, by the way, not just in the United States, but in US territories too. How about that? Okay. In any case, there's income requirements. You can see the description here, different income requirements. You basically, your income has to be less than 50% of the area median income. That means this is a low income program. All right. So in any case, let's see, there might be one more here. Farm labor housing loans and grants. So you can use this to build housing for farm labor. I know people in Illinois have done this. South of Chicago and all that, down in corn country, they would build duplexes for the farm workers, okay, and rent the properties out to the farm workers who also made money renting, farming the land. Great program, okay. So in any case, that's another one for you there, particularly for those of you who live somewhat in rural areas. All right. Same kind of thing, rural housing, but for repair loans. And here it goes. There's grants. Remember I mentioned earlier, sometimes you can get grants. Well, these grants usually don't have to be paid back. Okay. Look, grants for up to $7,500 are available. Let's see, for requirements, $7,500 grants, maybe recapture the property sold. So in other words, if you get a grant to fix up a property and you eventually sell the property within 3 years, you've got to pay that back. Okay. You can also combine loans and grants. How about that? Okay, let's see here. I think we're getting close to the end. We are. Okay, so let's do this. I'm going to switch gears here, guys. Hang on one second and go to some other possibilities, right? We talked about a 203K. Actually, let me check for questions here. Hang on one second, guys. I think we're okay. You know, it's interesting. This is kind of a unique subject. People have been asking for it, but it's not. This is more like a lecture. It's not like an interactive webinar tonight where we're actually going over properties and strategies and things like that. These are just good old-fashioned uh, loan programs that you have to apply for. All the information is freely available online. We can give it to you too. I'll have this sent to you tomorrow. But in any case, we talked about 203K. All right, purpose is to help families repair, improve, or purchase and improve properties, refinance, improve existing residential structures more than 1 year old. Right, 234D, construction or rehab of condominium projects. How about that? Okay. 203B. 203B, an interesting program. I actually participated in this about 15 years ago. I took three of my properties that were rented to families who were receiving a Section 8 subsidy, and HUD was really pushing the 203B, which is a home ownership program. And I'm like, well, this is pretty awesome. You know, it's a way for you to participate in improving other people's lives. So the first one I did was a 3-bedroom, 1.5 bathroom, 2-story home, all brick, great backyard, off-street parking, awesome neighborhood. And I had a tenant who had been renting for me for years, and I approached her about it because she always talked about, one day I want to own my own home. And she had 3 beautiful little girls. So in any case, I showed her how to apply for the program, and sure enough, I got called from one of the inspectors, from the housing inspector. The HUD Section 8 basically used the city's existing housing inspectors to do this type of work. So he came out, looked at the property. I told him what I was doing to remodel it to make it eligible for sale, and he gave me a few pointers. Came back out a couple times, checked out the project, came back and did a final inspection. I was done. And what happened is this Section 8 tenant did become one of my home buyers of one of my properties, and she got a HUD-backed loan, low interest rate, 3.5%. Okay, and she also got a grant from the state for her down payment. It was a special program to encourage home ownership amongst people who would otherwise not be able to buy homes. So 203B, my understanding is it does still exist, but each state, each county, each municipality can choose whether to administer or not. That's my understanding. So don't quote me on that. Just I've seen it in some parts of the country and not in others. So in any case, a great program, 203B. Another program for low to moderate income families is the 221D. And guys, all these, remember this, they come and go. These loan programs are not like static forever. They come and they go. Sometimes they're more prevalent in certain economic cycles and not in others. So the government can put them in and they can take them out. Okay, so you have to always check with your local representative and see what's available right now. Okay, we talked about some of the urban area. We talked about suburban area loans, but urban area loans, you know, when we're looking to reclaim certain neighborhoods and cities, sometimes they'll get a huge grant from the government, and they'll also make individual loans to individual homeowners to participate in areas that got government grants. Okay, programs for condominiums, 234C. All right. Let's see, rental housing. Now we're talking some good stuff here. Again, you have to check and see what's current, what's available now and what's not. But the old program 207 was for investors to provide rental housing for middle income families. Okay, if you think about that, you think that might be a good thing to do right now for a government. I think it probably would be a good thing to do, to be honest with you, because we have more renters right now on a percentage basis than we've had in 50 years. Okay. In any case, here's one: rental housing for moderate income families and the elderly. Okay. Now think about the baby boomers. They're retiring and downsizing in massive numbers. Like currently right now, 76 million of them. That's a lot of people. Okay. So there's programs for the elderly to help them get good quality rental housing. All right. Or if you're an investor, you could make the properties available and rent to the elderly, right? Let's see, rental housing, urban renewal areas 220, so that's for multifamilies, okay? So just remember this, it's called a 220 program for multifamilies in urban areas. That's going to be your cities, basically, right? Let's see, supplemental loan insurance, multifamily housing, another one for multi-unit housing. Any case, you have to basically what this is multi-unit project, okay? And if you're near, hospital, nursing homes, facilities, hospitals, things like that, already insured by HUD, you can participate in this, right? Let's see, a 223F, refinance existing multifamily housing. Here's another one, a 202 for elderly and handicap. There's also, I mentioned grants before. My first experience with government grants was back in, there was a famous running back from the Pittsburgh Steelers named Franco Harris, okay? And turns out he's an awesome entrepreneur and a great businessman, as well as being, a historically significant running back for the Pittsburgh Steelers that won 4 Super Bowls with him, by the way. But in any case, what I recognized is I was looking at what he was doing, just watching, success leaves clues. And I got to meet him one time. It actually was at the club level of a football game. And I got to meet him coming out of the bathroom. We actually talked about this. And he said one of the coolest things he learned to do was to follow the money, government money, grant money. Where's the government making big block grants? Like in one case, there was a neighborhood that had received $10 million, a small neighborhood. Well, obviously, any savvy investor is going to invest around that area, and that's exactly what Franco Harris had done. So look for where the block grants are being granted. They publish it. They have to publish it. It's public information, and you can find that out. So there's entitlement grants or small city programs, big city programs. It's basically, they're aimed at helping us basically, recapture like an inner city, for example, okay? Rejuvenate it, renovate it, and get people back in town again, all right? In any case, some great programs here, guys. That's pretty much what I have for tonight. I want to flip back over here to the other document. Hang on one second. Because there was some other information. I don't know if I went by it too quickly. Essentially, what I was going to say is this. What you can do is, wherever you live, whether it's U.S. or Canada, you have, federal government, state or provincial government, or local government. We all have representatives at the state and provincial level, and we all have representatives at the federal level. What you can do is, if you're interested in what's possible at the federal level, is contact the office of your own representative at the, who's at the federal level, but in your area, okay, representing your area in the federal government. If you're interested in state programs, obviously you go to your state representative, whoever represents your area in your state or province, and they have all this information. They simply will just send it to you or point you in the right direction, and you can see what's possible. So, in any case, I'm going to send this stuff to Beverly, so you guys can all have this tomorrow. I hope you like that subject. I know it's not it was sort of a lecture tonight, not necessarily an open dialogue between you and me, but the reason I want to do this is some of you asked for it, but more importantly, guys, if you're really looking to expand your business, definitely pay attention to what programs are out there, not just for yourselves for investing, but for you to help your clients invest too, because a lot of them are just not aware of this stuff. And one of the things, if you're a realtor as well as an investor, whatever things we should be doing is providing all this information to our clients, being a good service provider. And it doesn't take that much. I mean, I have all this stuff here that I've accumulated over the years at my fingertips, and I keep everything documented. That's why I'm able to write the books I write, because I've got everything saved over all the years. So in any case, I appreciate you participating tonight. The next meeting, next webinar is, it's Tuesday again, next Tuesday, the 12th, same time, 7 p.m. Eastern, and I will still be here in Georgia, okay? I forget where I'll be in Atlanta. I'll be on the eastern side of Atlanta next Tuesday. I will be in the Georgia area the entire month here. All right, so right now this week is mainly central and central in the middle of Atlanta and southwest. Next week will be to the east of Atlanta. The week after that, I'll be sort of like a westerly northwest. And the final week, I'll be in the north, north of the city. So in any case, guys, I look forward to seeing you all in Atlanta at the 3-day event. Look for the information coming from Beverly. Grab yourself a spot. And in the meantime, if you're in Georgia already and you want to meet for dinner or something, just let me know. This Thursday night, I'm going to Mary Mac's. It's a diner right downtown, famous, world famous diner. To me, it's world famous. Best Southern cooking you can ever eat, ever, other than my grandma's. Okay. So in any case, if you're here in town, look me up and let's get together. Otherwise, I will see you all next week. In the meantime, God bless you and your families, and take care of yourselves. Okay, guys, I'll talk to you soon. Bye-bye.